AM 600 KIVA, ABQ.FM, rockoftalk.com. I'm Eddie Aragon, the Rock of Talk. Glad to be here with you and yours as we kick off another Super Saturday of programming right here in the Kiva with Tego and Tracy Venturi, the Venturi Real Estate Group from Keller Williams Realty. Pick up the phone and dial them today, 505-448-8888. That's 505-448-8888, or go to the number one website in the state of New Mexico for real estate. That's welcomehomeabq.com, welcomehomeabq.com. Before Tego and Tracy join us, let's go ahead and rifle through their show and talk about their topics before they do. And best way to support our radio station is support the people who support your listening. Tego and Tracy have been doing that for 8 long years here in the Kiva. Feels like only yesterday when they got started. And now they are a burgeoning real estate team helping Kiva listeners and other people throughout the valley here in Albuquerque. By the way, the topics for today's show: when will we have more homes for sale? Tego's going to hit that. And then how mortgage markets work. That's interesting. We have mortgage rates pushing forward. And then non-warrantable condos. I don't know. That sounds dangerous. Maybe I'm a little uncomfortable with that, but we'll let Tego and Tracy to go ahead and get through all of that and more. Thanks, everybody, for being here as always. And don't forget, welcomehomeabq.com. That's welcomehomeabq.com. Tego?
Thanks, Eddie. Appreciate it.
Oh, there we go.
Oh, wait, look at that.
We got more Beatles. There we are.
Yeah,
ahead,
good. Okay. Hey, good to see you, Eddie.
And then we got to turn Tego on.
He's
finally unmuted. There he is.
There you go. Eddie, you do it all. You're the audio engineer, the station owner, general manager, talk show host. You know, is there anything you don't do? Run for mayor, for governor?
Yeah, one of the things I don't do is I never count what I actually do. That's why I just do what I do. So I get up in the morning and it's time to do whatever the next thing is to do. So never count, right? Or never put on all the hats. Just say that you're there just to make things work. And that's exactly what you two do over there at the Venturi Realty Group. You're like, well, I got to take a picture. I got to go ahead and show a property. You got to do it all. That's what it takes.
Yeah, for sure. Well, we have a special guest this week, Eddie. Lee Smith with PRMI Mortgage. It has been a, let's say, nutty mortgage market in the last month or so. Definitely in this week, it got really crazy. Sure did. And so thought it'd be interesting to talk about, how mortgage markets work. And Lee, you're with PRMI Mortgage, which is Correct. Primary Residential Mortgage Incorporated. Got it. Okay, PRMI. Got it. Yep. And you are a local mortgage originator, broker.
Originator, right? Banker. Mid-sized bank, I guess you could call it. We focus on mortgage only. Yeah. So, and just to get it out of the way, what's your MLS number, just for reasons that are required? Oh, okay. Let me pull that up here.
Oh, sure.
I don't have it memorized.
He doesn't have memorized. I know. So there's regulations that anytime mortgage brokers that are licensed, well, you got to be licensed. Mm-hmm. You have to disclose your license number. That's one of the regulations. So, the big thing is you're looking for that, Lee, is there was a huge move in mortgages in just the last month or so.
There sure was.
We went from around, let's just say 3% to now 4% plus on mortgage rates. And that's a big move. I mean, you think about that, that's 3% to 4%. That's a big move.
In about a month, that's happened. Yeah. It's just it's happened so fast, and it's definitely brought on challenges, due to it. A lot of borrowers have surprised. It's like when we pre-qualified them, and as you know, that's a whole nother challenge in trying to find a home.
Exactly.
But, you pre-qualify them, and they look, and they're sitting there and looking, and a month later, rates have gone up a point, a full point, and so that's definitely discouraging. It
is. And there's a survey we're going to talk about that basically highlighting how discouraged buyers are. Mm-hmm. So again, your MLS number?
Yep. MLS number is 492-537.
Okay, good. Got that out of the way. Yep. So what I want to talk about, Lee, is how do mortgage markets work? Because a question that's now coming up is, anybody that's kind of casually following the news, they hear about what's going on with the Fed, and the Fed is going to raise interest rates.
Right.
And then they go, well, they haven't raised them yet, but yet mortgage rates have gone up 1% in the last, just over a month. So So how does that work? Why? There obviously is not a direct correlation to what the Fed does versus what mortgage rates do. So can you try to unwrap that a little bit?
Yeah, sure. So, at the heart of it, the mortgage movement is going to be based on what's happening in the economy. Typically, a lot of times when there's, unfortunately, when there's bad things that are happening and the markets are crashing and that kind of thing, and it's affecting, the stock market, the 10-year Treasury rates tend to move down. Okay. And when things are doing well or inflation is up like it is now, then the rates start to move, right? But the thing is with mortgage rates, it's a lot of times based on emotion, okay? Things that are going to be happening, right? A lot of times, like with what's happening now with inflation and the talks, just the talks alone of, okay, the inflation is through the roof. We've had the biggest year-over-year increase in 40 years. That scares a lot of people because they know what's coming next. And what's coming next is the Fed raising the overnight rate, the Fed pulling back and not buying nearly as many mortgage-backed securities and really coming out of that market.
Yep.
And just the news of that, rates are based on emotion. And that's what drives it is emotion.
Yeah, and it's really so the mortgage rates. Well, let me just ask this. I'm not going to say it as a statement. I'm going to ask it as a question. Do mortgage rates really they're pricing in the future?
Exactly, they've priced it in. So what we're hearing now is that the Fed is considering a 50-point BIP increase, 50.5% increase to the overnight rate. Now that's not the mortgage interest rate, or like if you're getting an auto loan or your interest rate on your credit card. That's not what that is.
Yeah.
But what it does do is it affects all of those rates. Okay.
Yeah.
Now, when we hear that there's going to be a 0.5% increase to the overnight rate, people panic, right? And they price it in.
Yeah.
When the emotion, they price it into the rate, and our rates start to move up. And they've moved up significantly because of the news of what the Fed is going to start to do here in March. By the time it actually happens, it's already been priced in, like you said.
Yeah.
So we don't see nearly the same effect. So when it actually does happen.
So come March when they, some people are saying a half a point, some people are saying a quarter point, looks like everybody agrees they're going to raise it somewhat.
Right.
And the reason they're doing that is they want to slow down the economy to pull back on inflation.
Right.
Yeah.
With the news yesterday, the CPI, and yesterday was a pretty big increase, 83 bips, which is pretty significant, 0.83% to some of the pricing, not necessarily the rate. But with the news of that, now there's a 44% chance that the Fed is going to increase it by 0.5%.
That would be big.
Increase,
that would be big. And I know there. If I follow all these economists on Twitter myself, that's one of my things I do, and it's really interesting the conversations and debates going on because nobody really knows. But what happens is what happened on Thursday when the inflation numbers came out. The market tanked. Mm-hmm. The 10-year Treasury went up substantially. It went up over 2%, which was the first time in I don't know how long. Well,
I'd say
got the chart
probably
right
at
here.
least over 2 years.
Let's
probably
see. Last time it was at 2% was 2019. Mm-hmm. And so let's talk about that actually. So if we look at 30-year fixed rate mortgages, they're somewhere around 4%. Is that fair to say?
Maybe even a little higher right now.
Maybe a little higher?
Yeah.
Okay. And the thing I thought was interesting about that, though, if you look back in history, we're basically back to where we were so let's say, January of 2020, pre-COVID.
Exactly. And that's the thing is we do need to change the narrative a little bit here, right? Because, yes, rates are definitely higher than they were a month ago. They're definitely higher than they were in 2021 and 2020, but they are back to where the direction we were headed, at the beginning of 2020, pre-COVID, and we're right at that same level again. So we're right back to where we were at.
The question I'm getting a lot lately is, are the higher mortgage rates going to slow down the housing market? And I think the answer is yes. I think the big question then is how much?
Right.
How much is it going to do it? How many buyers are going to be taken out of the market because now their mortgage? So we did a chart here. If you look at a $250,000 loan, let's say loan dollars, at 3% it was $1,054, and at 4%, or it's at let's say $1,200. So it's about $150 more per month
Right. Yeah. And so that's what ends up happening is
Yeah.
that when the rates move, then people are priced out of their homes or where they were looking, especially when their debt to income ratios are pretty tight. Now you're looking at, okay, one, your payment has gone up, or does that mean you can, now you have to buy less house? And we talked a little bit about, that type of an increase, a 1% increase in rate, which that's what it's been over the month.
Yep.
How much house can you buy now? And you probably lose about $30,000 in buying power.
Yeah. And it's interesting, Lee. I went back and looked at like 2018 when we had the mortgage surge. I think we had a surge in 2015. I'm trying to remember exactly where we had. We've had periods where mortgage rates went up really fast. Right. And I was curious to see if there was some correlation to home prices and then the number of home sales. And the thing that was interesting, I just looked at Albuquerque. There really wasn't a change.
No,
it really didn't. At least in those times, it did not take people out of buying. Statistically. Now the one variable that we have now that we didn't have then is we've had 2 years of price appreciation. Somewhere between 20 to 30% in 2 years. That's different. So it's gonna be curious to see. You said something. I just want to go back to it. You said debt to income, or what we always say, DTI.
Uh-huh.
What do you mean by that? Because I think that's it's a very simple thing. I think, but if you've never shopped a mortgage, you have to understand that. So what is debt to income?
Debt to income ratio is your is your total of all of your liabilities, your monthly obligations. Okay, based on the credit report, plus the proposed housing expense, the house that you're looking to purchase.
Okay. And
you take that and you divide it by your gross monthly qualifying income.
Okay.
And that gives us a percentage. Most loan products want you to stay, at or below 45%. That's, more ideal. You can usually push that up to 50% with, factors such as good credit and a really strong buyer. But, so typically you want to stay at about 45% debt to income ratio. So again, your total of your liabilities and the proposed housing expense divided by your gross monthly income.
Got it. Okay, got it. So let's just do the anecdotal thing. So here, Venturi Realty Group, we're here in Albuquerque. There's still a lot of buyers out there looking for homes. That's
Absolutely.
What we're seeing. We have not seen much change there.
Lots of pent-up demand.
Lots of pent-up demand. And so in the mortgage world, you guys do, a pre-qualification, a pre-approval process for people that are looking for homes. Have you seen much change there?
We haven't, no. In fact, what's happening now, it feels like we have a lot of people now feeling the rates going up, and the news definitely can help and hurt you, right?
Yeah.
And so with all the news of rates moving up as fast as they can, now there's a rush to say, we need to buy now. Because there's no, right now they don't know when these rates are going to stop moving, right? And they can continue. And so there's now been a rush of people that just say, like, I need to buy, I want to buy. And as you know, in this market, Albuquerque, and we talked about this before, that it's not just Albuquerque, but rents are through the roof.
Oh yeah. In fact, rents have gone up faster. That's one of the things that we hear a lot right now when we're talking about inflation and we're talking about housing costs and rental costs and shelter costs. Is real estate is actually a really good hedge against inflation,
right?
Because now somebody that bought a house a year ago, they're locked in at that monthly payment forever.
Right.
It doesn't get affected by inflation.
Right.
Like
rents do. Right.
Like rents do. Right. Now, of course, you could argue, yes, the value of the dollar is less that you're paying with and all that. Okay, I got that. I understand. But I'm just saying it, a real asset like real estate generally is a good hedge against inflation.
It really is. Yeah, it's one of the best hedges against inflation because it is going to continue to appreciate as inflation is up. So is that appreciation on the homes. And like you said, we've seen double-digit 20 to 30% increase in the Albuquerque area. That's going to continue. And so we've really been educating our borrowers, our pre-quals, to stay in the market. It's still a great time. Rates historically they're still low, like we said.
Of course,
they're still the same level as they were in 2020 before pre-COVID. And appreciation is still there. It's going to continue. It's driven by supply and demand, and as the supply issues that we have, there's just not a whole lot of homes in the market currently, and we still have
boy, isn't that the truth,
right? We have a lot of demand. That's going to drive prices up and continue to. This supply and demand issue that we have, or the supply issue that we have, isn't going to be over in the next, I don't feel like probably in the next couple of years, because it's such a big issue right now.
Yeah.
So why not secure that appreciating asset at a time when rates are still historically good? A lot of buyers do have short-term memory, and it's not as good as it was, like I said, a month ago.
Yeah.
But it is still a great time to buy.
So if you look at post, let's say, the Great Recession, right? The housing crash, whatever you want to call it, right? Coming out of 2010, 2011, 2012, mortgage rates came down a lot, just same thing, right? The Fed did some stuff to stimulate the economy, all this stuff, right? So, we've been in this 4%, 5% range for many, many years now. Yeah. And right now we're still, if you look at it again historically, we're at the lower end of that. Well, I'll call it the middle end of that range, because we have had 3% mortgages for the last 2 years. So anyway, I think we've beat up this mortgage thing enough. Lee, you saw a story, and I know, I saw the story too. And Fannie Mae does a home purchase sentiment index. Okay, so Fannie Mae is one of the funders of mortgages, right?
Right.
Okay, we can get into the secondary mortgage market too if we want, but they do a survey, and it was basically the buyer sentiment was at an all-time low, meaning it's like the worst time. I forget exactly the question. How surveys are. It depends how it's asked, but basically it's saying, is now a good time to buy?
Right.
And it hit an all-time low. So that was splashed all over the news this week. And I can see why buyers feel that way. I
can see it too. I can see it with the news, again, good and bad, right? Yep. The news is pushing, rates are moving up. They're high. They're going, they've had this increase that's, unprecedented, and it's going to continue to go up. But then the other part of it is, they talk about inventory, and it's a seller's market. And so that already has a connotation of it's not a buyer's market, it's a bad time to buy, right? Which isn't true. There's so many good reasons to buy right now.
Well, in the question, and that's just it. It's like, okay, well, is it a good time to buy? Well, kind of no, if you look at it from the standpoint, there's very little to choose from. It's very competitive. Interest rates have gone up at 1 point in the last 2 months. Right. Then yeah, okay, I can see that. That makes sense. It's really frustrating to be a buyer. Big picture, though, is it a good time to buy if your intention is to be in the home for 10 years? I don't see why not.
Right. That's where I'm at with it. Long term, you look at it, and it's a great time still, right?
Yeah.
But you're right. Short term, you're competing.
Was it better a year ago? Of course it was.
Of course it was.
That ship has sailed. We're not there anymore,
right?
There.
That doesn't mean stop buying. Right?
Yeah,
There's still opportunities out there.
Yeah, and we know. Again, we already said this, but we see it. You see it in the mortgage brokerage world that there's still a lot of buyers out there that are looking for homes, and there are very, very few homes for sale in the Albuquerque area.
And what also comes with that sentiment, where the buyers feel like that, they're also capturing people that are probably out there looking and discouraged. Because of multiple offer situations, they've probably put in 10 or 15 offers and lost out on them just because, and so you have a pretty big pool of buyers that are looking, because I imagine that right now, I don't know the statistics on this, you probably know better than I do, that we probably have one of the biggest pools of buyers out there right now.
Oh,
right?
yeah,
right
for
where
sure.
we're at right now, and that's
for sure.
Part of why the supply issue is what it is. So you have a lot of people looking that are just so discouraged with the market because they do lose out on a lot of offers.
Yeah, I guess my only point is if you see the headline that says, buyers say it's the worst time ever to buy, that doesn't mean they're not going to, because they're still out there, right? So don't match one headline with a belief of what's going on in the market, right? So this whole conversation about inventory, that's kind of real estate lingo. Basically, it means homes for sale on the market. We just this week hit another all-time low for the Albuquerque area. And there was a conversation on one of the Facebook groups that's just realtors here locally, and it's like, this is nutty. And one thing that I've tracked, Lee, over the years and is, when do we generally see a seasonal change in the Albuquerque area for the number of homes on the market? And by the way, if you just tuned in, this is Tego Venturi Realty Group with Keller Williams Realty, and you can reach us at 448-8888. I'm with Lee Smith with PRMI Mortgage Broker here, local Albuquerque. Lee, how can people get a hold of you if you want to talk mortgages?
Yeah, my phone number, my direct line is 505-507-4751. That's the best number to reach me at.
Perfect.
It's my mobile. Text, call.
And I will say, people that are thinking about buying, I know it's great. You can get on websites and look at homes and do all that. But man, talking with a trusted local mortgage advisor is so critical, because mortgages are not cookie cutter.
They're not.
No.
You can lose thousands by talking to the wrong lender.
Yeah.
You really can. And, and put yourself in a bad situation. I talk to people all the time. One was talking to a lender, and it took weeks and weeks and weeks. Found out they couldn't do it. Rates had gone up by then. We got a hold of it. We were able to get it done. But it's just that even that time lost when you're talking to the wrong person. It's so important, and especially in this market.
So what I looked at was, so back to this whole idea of, okay, when are we going to have more homes on the market? All-time low. We're like 600 homes on the market in the Albuquerque area right now, which is just ridiculous, right? And to put some perspective on that, a balanced market is 5-6 months supply. Right now we're at like 0.5 months supply, right. Which means, if we had 5,000 homes on the market versus the 600 right now, we'd still be considered kind of a balanced market, or still maybe even a seller's market. Mm-hmm. It would take about 5,000 homes to come on the market to push us into what we traditionally would consider a buyer's market. So we got a long way to go.
Long way to go. Yeah.
And we're not going to build our way out of it. That's a whole nother conversation,
right,
with what's going on with new construction. So, but seasonally, what we've seen is sometime around the end of March, early April is generally when we see a bottoming of the number of homes on the market in the Albuquerque area. That's not good news for us right now, where we sit today.
We still haven't hit the bottom.
We haven't hit the bottom yet, right? And we're and so my hope and my wish is, if you're thinking about selling out there and you're listening, or people that are thinking of selling, get in earlier than later. I assure you, there are lots of buyers out there that are looking for homes.
Oh yeah.
And it earlier is better.
Absolutely. I mean, it is truly a seller's market right now. I mean, you can get top dollar for your home right now. It is the time. If you're thinking about selling, definitely call Tego. I mean, it's a great time to do it.
Yeah. Yeah.
Probably one of the best times historically that we've had.
Interesting. We did
sellers.
that show. We did that show last week. Tracy and I talked about that. Is this the greatest time ever to be a home seller?
It really is.
And you're going, well, statistically, yes. Could it be better next year? I don't know. But it's interesting,
and it's funny because I hear a lot of the realtors I work with. They're all they're all on the listing side now. They're listing because they can list those houses and they sell within a weekend, multiple offers, and
it's interesting. I got to tell you this, Lee, because that you say that and then people think, well, oh gosh, it's just so easy, you just do that. And we were having our team meeting here talking about it, and it's like, oh my gosh, it's like more work now than ever, even though, yes, it's happening fast, but filtering through 20 different offers and trying to figure out, what the best offer is, what's going to be the best deal for the seller.
Mm-hmm.
They want to net the most amount of money, but it's not always just about money. It might be about timing. It might be about terms. It might be about repairs. And one of the other things we always talk about, and you'll like this, is, who is the lender that buyer is working with? If it's cash, okay, that's one thing. I get that. But if you're a seller and you've got 10 offers and they're all pretty, let's say equal in dollar amount, for example, one of the things that we think is super important is who's the lender, who's the person that's helping that buyer get the loan, because we've seen way too many crash and burns over the years with people that got pre-qualified with, let's just say, an online lender. I'm not saying they're all bad. I'm just saying, somebody that's not local, and crash and burn. And you've probably bailed some of those deals out before.
Absolutely. It's so important, one, to have a local lender who knows the area, who knows this market, who works with the local agents, who understands this community. What we see a lot of, and especially over the last couple of years, there's been a lot of companies that have come out of nowhere, mortgage companies. A lot of companies will issue what I call false prequals, where they haven't done their due diligence, haven't looked at credit, maybe just had a conversation with the borrower, and here's a prequal. And that is happening out there,
We know.
Yeah, you've run into it. So it is important to have a good, reputable local lender who understands this market and who can stand by those prequals, and as you know, having deals fall apart because at the end of the day, the borrower wasn't qualified when you could have found that out on day one, waste a lot of money, waste a lot of time, and causes a lot of frustration,
Yeah, and I know when you do, let's just discuss that real quick. What's the difference between a pre-qualification and a pre-approval, for example?
Sure. So a pre-qualification is going to be where the loan officer will pull the credit. Okay, a true pre-qualification, they should pull the credit, analyze the liabilities, take a look at the income. Really, understand what that income looks like, and take a look at the assets, make sure that they have sufficient funds to close and to get to the closing table, and based on that information, run it through AUS, which is automated underwriting system, which most lenders should run their files through, and as long as that all checks out, then you can issue a pre-qualification letter.
Okay, got it.
Versus a pre-approval where it takes it a step further. Where it takes all that information, actually submits it to an underwriter who then reviews the file and issues a conditional approval.
Right.
And condition based on, okay, everything looks good here. We're just waiting on an appraisal at that point.
Got it.
Right.
Got it. So. You said credit, and it just made me think about it. And I'm sorry, I pulled this up here because, following our show is Michael Ramos with Credit Rescue New Mexico. So Michael does his show and helps people clean up their credit. When you guys price, or not you guys, it's not really you that price it, but your credit score will affect how much your mortgage rate is going to be. We're going to circle this all the way back to mortgage rates, right?
Yes,
so when you see mortgage rates being quoted out there, and let's say they're quoting them at let's say 3.75 or something, right? For people to get the very best mortgage rate, what kind of credit score do they need to have?
740 is 740 plus is where you want the credit score to get
That's
the
the
best
magic
rate.
number.
Yeah,
740.
it's the magic number. Yeah. Okay. And so rates, and I'm glad you brought that up because you're right. When there's a lot of competitors out there that are throwing rates out there that are saying, that we have these super low rates, but there's a lot more to it. One, are there any points associated with that, right? We can talk about that too, right?
Yeah.
But there's also what's called loan level pricing adjustments, where credit makes a difference, how much you're putting down, whether it's a purchase or a refinance, the type of home, single family versus multi-unit, versus condo versus
second home versus an investment.
Right? So all those factors come into play on how they're going to price your rate out. But credit is a big factor in that. More so on conventional loans. Conventional loans are very credit sensitive. Okay.
Just in real quick, in the couple minutes we have left, conventional versus like FHA, what's the difference?
Conventional would be Fannie Mae, Freddie Mac. Okay, they're government backed.
Yep.
Okay, so they're private entities, right?
Okay,
they're the biggest. 65% of mortgages in the United States are backed by Fannie or Freddie. Okay. Then you have FHA, which makes up about 20%. Okay. And those are government mortgages, HUD, right?
Okay.
And then you have VA, which is about 10%.
Okay.
And those are for exclusive for veterans, probably one of the best loan programs out there.
They are.
Loan program,
yeah,
100% financing.
Yep.
And then you have USDA, which is a small percentage. And then after that, you have maybe portfolio and non-traditional types of mortgages.
So, and I know there's like hard money and portfolio. Do you lump hard money and portfolio kind of together?
I do. Yeah, just kind of like the non-traditional hard money portfolio, that kind of thing. Yeah.
So to a certain extent, those type of loans are your traditional bank loans, right? They actually hold those loans on the balance sheet of the bank or whoever.
They insure those ones, themselves.
Yeah.
Instead of Fannie Mae, Freddie Mac, FHA insuring those, the government insuring them.
So Eddie, we just talked about credit scores. Michael's coming up next. So 740 is the magic number to get the very best mortgage rates. And with the big surge in mortgage rates this week, you're going to want to get the very best mortgage rate.